Coming up on Market to Market. As forests burn, USDA reaches deeper into its firefighting pocketbook. A looming El Nino could break Western drought, but will relief arrive in time? And the White House launches another salvo of global climate change cuts. Those stories and market analysis with Sue Martin next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, August 7th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. It's been more than 6 years since the end of the Great Recession, and the economy continues to show signs it is on the mend. According to the Labor Department, the unemployment rate remained at a rock-solid 5.3% for the second straight month. U.S. employers added 215,000 jobs in July, signaling a rising job market. The news has some economists thinking the Federal Reserve will raise interest rates in September. The global oil glut and the possibility we will run out of places to store the excess continues to pound crude oil prices lower. And disappointing earnings coupled with declining energy prices pushed the Dow Jones Industrial Average down 350 points for the week, the lowest close since January. The National Oceanic and Atmospheric Administration announced an El Nino weather system is waiting in the wings. Despite the fact rains and snowfall associated with the climatic event usually appear during the December holiday season, forecasters believe relief for the beleaguered West may be on the way. But will it be enough to help stop forest fires that have been burning for the past few months? The blazes have already taken the life of one firefighter and forced hundreds to flee their homes. More than 40 large wildfires are burning from Texas to Washington, with California suffering the most under the siege. The blazes have burned through 6 million acres this year, the fastest pace since 2011. In Northern California, the inferno has exceeded 100 square miles as fires hopped containment lines and other defenses proven to be effective in previous seasons. Around the lower lake area, about 100 miles north of San Francisco, at least 24 homes were destroyed, along with barns, sheds, and garages. More than 9,000 firefighters worked to subdue the flames. The California Department of Forestry and Fire Protection say the flames are chewing through the parched brush that hasn't been touched by fire in years. Containment has proven challenging.
What we're finding is the relative humidity are coming down. The temperatures are aligning just right to where all of our embers are starting to heat up again, and creating small little spot fires all along the roadside. So our job is to clean it up, and in order for the safety of the public to be able to travel the roadways.
This is one of the driest periods in California history and has led to the Forest Service, for the first time, to spend more than half its annual budget on suppressing the wildfires. The USDA agency estimates that percentage will spread to 2/3 in the next decade. Last year, the 10 largest fires battled by the Forest Service cost more than $320 million. The cost of fire suppression is predicted to hit nearly $1.8 billion by 2025. But changes in weather patterns could be coming to the parched region. Forecasters are calling for the return of El Nino, a weather pattern that could mean good news and lots of rain for drought-stricken California.
We're in somewhat uncharted territory with this El Nino episode, in that it has come on very strongly very early in the year. For California, I think at this point it still bodes well for drought relief, particularly across the southern half to 2/3 of the state.
However, what could be a wet fall, winter, and spring for much of the southern U.S. from the Four Corners to Florida, not everyone will benefit.
We tend to see a dry signal across the northern tier of the United States, stretching from the Pacific Northwest into much of the Midwest and also the Mid-South.
Global climate change caused by burning fossil fuels like coal and gasoline is a fact accepted by more than 97% of the scientists on the planet. The greenhouse gases generated by combustion of those carbon-based fuels traps heat in the Earth's atmosphere, creating, among other things, wild swings in the weather. The president says the problem is a reality we live with every day and is not something we can pass off to our children or grandchildren. This week, the White House fired another salvo at global climate change. The administration touted their move as a bold step, but opponents had a different name for it.
Right now, our power plants are the source of about a third of America's carbon pollution. That's more pollution than our cars, our airplanes, and our homes generate combined. That pollution contributes to climate change, which degrades the air our kids breathe.
The White House upped the ante this week on the Environmental Protection Agency's 2014 proposal to cut carbon dioxide emissions from coal-fired power plants, revealing plans to further slice output from 30 to 32% by 2030. While the policy could eventually cost $8.4 billion a year, the administration argued consumer power bills would decrease as low-cost fuel sources like wind and solar replace fossil fuels. Dismissing such estimates as too rosy, the energy industry denounced the proposal as government overreach that would create surging electricity prices. Coal state leaders vowed legal challenges. The governor of the country's top coal producer, Wyoming, called the action damaging, not just to his state, but the nation. Despite a likely veto, Cowboy state politicians promised measures in Congress to override presidential authority. Under the plan, states have individualized emissions reduction targets. Various methods like regional cap and trade schemes could aid in compliance. If a state refuses, it would be forced to follow a federal template. While some states require little or no further action to curtail pollution levels, others faced strict standards. Wyoming must reduce emissions by 44%. Montana's requirement doubled from a cut of 21 to 47%. Big Sky Country lawmakers were confident they could meet the EPA's initial mandate, but this week claimed the Obama administration moved the goalposts. And the cuts could have further implications for businesses that haul and process power plant fuel.
Today, with America leading the way, countries representing 70% of the carbon pollution from the world's energy sector have announced plans to cut their greenhouse gas emissions.
Despite the fact that Obama's successor could either follow through or undo the largest U.S. step ever to combat global warming, the president hopes to galvanize other countries ahead of the global climate treaty talks in Paris later this year.
We are the first generation to put an end to global poverty, and we are the last generation who can address climate change phenomenon.
Environmentalists praise the move as a progressive march to clean energy. But in rural America, reactions were mixed. Agricultural advocates like the National Farmers Union say the EPA's final rule should allow farmers and ranchers across the country to help bear the burden, saying, farmers can avoid greenhouse gas emissions and sequester carbon in the soil. Given the correct policy and financial incentives, farmers can mitigate climate change less expensively and more quickly than the rural power cooperatives that serve them.
Next, the market-to-market report.
Despite disappointing export sales and traders sitting on the sidelines in anticipation of next week's USDA reports, the grain market moved higher. For the week, September wheat rose 11 cents, while the nearby corn contract was 2 cents higher. Soybeans gained ground this week as traders were willing to let the market float in anticipation of the August report. The nearby contract gained 22 cents. September meal prices kept pace, moving $5.60 per ton higher. In the softs, December cotton fell for the 6th straight week, losing $2.32 per hundredweight. Over in the dairy parlor, September Class 3 milk futures improved by 8 cents. The livestock sector strengthened this week as the October cattle contract gained $2.60. September feeders climbed $2.83, and the October lean hog contract increased by 40 cents. In the currency markets, the U.S. dollar index gained nearly 0.2%. A worldwide glut and potential storage problems pushed crude oil down $3.25 per barrel, its lowest level since March. COMEX gold lost $1 per ounce, and the Goldman Sachs Commodity Index declined more than 12 points to settle at 365.30. Here now to lend us her insight on these and other trends is one of our regular market analysts, Sue Martin. Sue, welcome back.
Thank you, Mark.
It's good to have you here, and this was a week we finally saw some positive export news on the wheat side. It looks like we're finally starting to get some of that wheat moved. Do you think that's going to carry some strength forward into next week?
I think it is. We closed higher for the week on wheat, corn and beans, all three. And after having made a lower low, I think, Mike, that says we're going to see it portends a higher high this next week as we go towards the USDA supply-demand report on Wednesday. I think that, we look at the dollar, it's holding firm, but you look across around the globe and there's a lot of issues. And of course, France, their crop is down. Germany's crop is down. Spain is having some issues. And so we see those crops downsize. The problem right now is the Black Sea is a little more competitive than us, and that's kind of what's garnering the business. Saudi Arabia was in the market this week, and we have to keep one thing in mind is that Saudi Arabia is importing an awful lot of wheat and expecting to import more. And it's because they cannot afford to, it's a water-intensive crop. And of course, temperatures have been horrendous over in the Middle East, in Iran and Pakistan and Saudi Arabia. They've been seeing temperatures of 125 or higher. So, they've had death loss and what have you. And so I think the demand is going to be good. The problem is that for us, now we've finally seen a good number this week of export sales, but it's about time. And the dollar really is playing a hand here for right now. But I do think the market got extremely overdone to the downside. It's been a one-way street for so long. And I think now we're going to catch and see some short covering, and seasonally wheat tries to bounce here as well.
Okay, so maybe last week's low could be a fairly medium-term low.
I think so. I think so. And if we go lower, how much lower are we going to go? Probably not much more. Maybe you take Chicago wheat down to maybe 480, something like that. KC, maybe the same thing. But that would be, I think we're not far off those lows. It's just that we don't want to see the market catch there and then all of a sudden just go in a sideways phase. Wheat tends to not do much of that sideways behavior very long.
Well, now let's talk the corn market. Talk about sideways. This December corn has been at 385, roughly, give or take, a little bit bumping up against that for going up on 2-3 weeks now. Sue, any chance on this report on Wednesday could cause us to shoot up above that?
Well, I think we will. I look for higher highs on corn as well this next week. From the 454 1/4 high, we reached a wave 5 price projection on the downside at 374 3/4. We got to 74.5, I think, or something like that for the week. So I think we've met a low there. We should see a little more reaction and response to the top side. It's kind of taking its sweet time in doing it, but the trade is going to be watching the forecast. And if we continue to see hints of being drier with some heat stepping back in, we kind of waffle on the temperatures, but the moisture seems to be like it's stepping backwards on us here. And if that occurs in the eastern corn belt, traders are going to be watching the weekend weather forecast and coming into Sunday night, Monday. And if that continues to show, the 10 to 15 day or something like the 11 to 15 day forecast as being a little more drier, below normal precip, they're going to probably run the market a little bit. I think you'll see the shorts cover. Another thing I think that we have to look at is the yield expectation in this report. Will the USDA lower the yield? At first I thought no. And back in 2010, which we had a pretty wet year that year, the USDA actually from the July report raised the yield into August by about 1.5 bushels or so. It pushed it up to 165. But then from the August report to the final, we dropped all the way down to 152.8. So we'll see. I don't think the yield, I think the USDA is too high. And some of the wettest moisture weather that we had for the Eastern Corn Belt was in that 1st of July to the middle of July timeframe, and then we stabilized. So I think the yield will come down from that 166.8 that the USDA had at the end of June. I think we'll come down. The average guess, I think, is a little over 164. I think that's too much. They're asking for like almost 2 bushels to the acre. I don't think that'll be, but I think a 165.4 like Informa had might be very doable.
Okay, might be realistic.
Yes.
Well, now as we jump into the soybean discussion, we had a question here from one of our followers on Twitter. And this is Matt, and Matt is looking out at the new crop soybean situation. And he says, will new crop beans see another pop before harvest begins? And as we look at this report and the acreage numbers coming out, what is your feeling, Sue, come next Wednesday? Do you think we'll get some upside support here in the soybean market?
Well, I do, and I think August is bean month, and I think the expectation as we go into that report is, one, the question of how many acres are we going to be down? Because we'll be down some. Will it be 1 million and plus or 1 million acres? If it is, then that's going to lower the carryouts. In the meantime, you look at exports, and exports are 102% of the USDA's current estimate for this crop year. We only have about 2.5 weeks left, to go into that end of the crop year. And so it's obvious we aren't going to see huge retractions of exports now. So I think they raise exports a little bit. And then the crush has been phenomenal. The processors making good money. I'm surprised we haven't been importing beans. But they're making good money. Basis levels have been 70 over the board in the Western Corn Belt and $1.30 plus in the Eastern Corn Belt. I think that speaks volumes, and I think the crush is going to also be increased in this report. So the bottom line is the carryout should go down. So the attitude is that this should be a little friendly report. But the one thing they may not do is actually lower the bean yield, because beans can be, corn, when it has damage, it doesn't put it back on. Beans can. They can add yield back in, and they've got plenty of time to do something. So again, the weather forecast adds a little bit of something here. Will it be dry? Because everything's shallow rooted in the Eastern Corn Belt. It could certainly take those yields down sharply. But until we get past the August report, I think the USDA won't lower that yield on beans, even though I think they're too high. I think they won't do that until the September report.
So this report, the market mover could be the acreage number, maybe not trade the yield number much yet, being as it's still so early.
I don't think I would look at the yield number unless they shock us, but I don't think they're going to. But I think it'll be the acres that we're going to look at, and then it's the crush. Just like in corn, we had a record amount of DDGs exported in the month of June. And feed usage is very good. I just think, of course, if wheat keeps getting a little cheaper to corn, it might be that we shift that feed usage over a little bit. And then you look at, again, around the world, and there's rapeseed is in the downward slope. Canadian crops haven't been stellar. There's just lots of issues compared to a year ago at this time.
Issues that could give us a little bullish tailwind as we head through harvest?
I think we could get some lift here. We'll need to continue to see yields coming down as harvest, progresses. To be honest with you, I think we catch here, lift, and then I sort of worry that we still step back and take another look at the lows again.
Okay. Well, let's jump down into the livestock markets. We saw for the first time in several weeks, all three, live cattle, feeder cattle, and lean hogs up this week. General trend of coming off those July lows, Sue, or is there a more fundamental factor at play here in the live cattle market?
Well, I think in the cattle market, one, it's a little seasonal. Usually the very latter part of July to the first week of August, you'll turn and catch. Usually you'll also tend to take the August futures and put them $1 over cash. We haven't gotten there yet, and I think cash traded around 150 today. Okay. So I don't know how big the trade was at that, but there was some of that. I think that when I look at the cattle market here, we're tight supplied. Some say packers are cutting back the kill. I think we have some heavyweight cattle to the north that still need to go. But I fear that the market's going to catch its breath for a moment, and then I think we try to come back and make maybe higher highs again this next week. I wonder if we won't start Monday off on the sloppy side a little bit, and then maybe as we get to the middle of the week, we might catch a little bit. Our biggest problem is beef exports, down horribly, but then you look at the school lunch programs starting, and the box beef has seemed to stabilized, I think. It's possible we could put $12 back on that box beef. If we do, then that means your October cattle maybe find their way back up around 152, maybe 150. I'd watch the 150 level on October cattle. I'd watch 150, 150 to 152 on the August.
Okay. And now feeder cattle, do you think the same situation is going to play out as we roll through August into October?
Yes, I think feeders, they seem to still have some pretty good demand. I think that when I look at the feeder market, technically, that chart has a huge head and shoulders base. Now, the fats did too, but they violated it, but they're still coming out of it. The feeders did not violate it. So the potential to the upside is still there. The problem is 217 to 18 basis August feeders could be maybe about enough. And then all of a sudden, what happens, if we were to sort of peter out and turn around and take another step down, that all of a sudden you could set up a little head and shoulders top that's pretty wide based. And it was interesting. It was like through July, there was a little head and shoulders top over the top side of that cattle market, and everybody pointed to it, but nobody pointed to the huge base head and shoulders bottom. Obviously, that shows how negative they are.
Right.
But as we go forward and we move into next year, beef production next year should be up 4% in the first quarter and for the year. The second quarter could be up as much as 10%. I think producers need to watch this fourth quarter's rallies and use them to be marketing.
You bet. Plan out, plan ahead.
Yeah.
Well, now let's talk this hog market, Sue. We're 40 cents to the upside here this week. What do you think on this hog market? Is demand staying strong for pork?
Well, we're certainly seeing some featuring of pork in the grocery stores, and it is cheap. And China's pork prices are record high. And I think that they're in the process of moving pork industry and poultry into the north and northeast, where the major amount of their corn is being stored. I think that's a smart move on their part. You'll still have it in the southeast too, but I think that's a very good move in their part. Their sow herd is, I think, the lowest on record, very low anyway. And I think that when I look at the hog market, it seems to me like this is getting to be an old bear market. It's been down, 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 and we need to keep an eye on those spreads between cattle and hogs because they've been extremely wide. They had a healthy correction through July. Now they're correcting back up to where that's favoring cattle, but at some point I think the cattle give to the hogs. I think the hog market, we might step back and look at these lows in the fall, but to be honest with you, I look at this hog market and I think there's something better around the corner. I can't believe we haven't seen maybe at least wave 4, wave 5 counts. I'll have to check them out, but okay. I think it's an old bear market.
All right. Well, Sue Martin, thank you so much for joining us this week.
Thank you.
That wraps up this edition of Market to Market. But Sue and I will continue our discussion and answer some of your questions in our Market Plus segment on our website. You'll also find audio podcasts as well as streaming video of our program exclusively at that Market to Market website. Plus, if you want to interact with us, check out the links to our Twitter and Facebook feeds. And join us again when we'll explore the August supply and demand numbers. So until next time, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.